Morning, viewers. Let's proceed with our series of financial management. And as we discussed earlier, we talked about the ethics, and we agreed that our next topic is going to be about ethics. And as we see the social responsibility and the ethics in financial management, one may be wondering why we included the social responsibility, because it looks to be different from the ethics, but they are a little bit similar in a sense that when you do the things that the public expects you to do, it's like you are doing a social responsibility. And that social responsibility is in alignment with the ethics, because these ethical codes of conduct or the guidelines and principles that are set by different professional bodies, they base on what different stakeholders want. They design them to make sure that when these professionals are executing their duties, they don't actually interfere with how people should be viewing. If, let's say, maybe they're shareholders, you are trying to do things that are going to be benefiting the shareholders. So based on that, make sure that we have an ethical behavior or practice. So as we understood from the point that we are going to be looking at ethics and social responsibility. As I said, it's as a result of doing a good use of the ethics that we have, or the behaviors that we have as professionals, that will be able to fulfill the social responsibility or the social need of the public that the business is operating with. So we say that ethics is just a kind of a like moral or a common sense. It's basically common sense. And it is what you think is right or wrong. And being ethical means trying to be reasonable and doing what you think is right. Because there are certain people who actually know what is supposed to be done, but they end up doing what they actually know is wrong, but maybe depending on their maybe personal gains and all that, they end up doing what they actually know is not right. So basically, when you're trying to look at ethics, is just that excuse me, we're just looking at the point that the financial manager, you are supposed, as a financial manager, you're supposed to promote ethical practices in the business. In any decision the business manager is making, is supposed to look at how things are going to be done. And that's what we actually look at, and we say, maybe we are doing what is right. So for easy understanding of actually what these ethical practices are, we need to look at ethics from a different angle, whereby we are going to first look at the unethical point of view, so that we actually know what because if you are to analyze from the unethical point of view, we are going to be knowing what the finance manager shouldn't practice, or what that person shouldn't do. And from there, we can know that at least if you do one of them or any, you are actually operating unethically. So that if you don't do them, you are actually working ethically. Because it's a requirement. We know it from our profession as accountants, the CPA, the Institute of Certified Public Accountant of Uganda, gives us the way we are supposed to be handling our things, depending on the whatever kind of item we are handling. We know what is supposed to be done. So let's try to look at what we shouldn't do as professionals, and after knowing what we shouldn't do, then we can be able to understand what operating ethically means. So we are saying, for easy understanding of the ethical practices, it's better we analyze it from the unethical point of view, which makes the financial manager to hold a high ethical means, because actually what happens is that if this financial manager doesn't operate ethically, or if that financial manager doesn't do what is right, you are going to intervene or to inconvenience some of the decisions that are going to be made by different stakeholders. Because if you do creative accounting, you doctor the accounts, you'll find that you are going to be misleading. Maybe you are doctoring the accountants, the accounting, depending, maybe if you, let's say you wanted to acquire a loan, and they are saying want maybe if you are to get this amount, we want to be having maybe the net profit of this. So you start creating the information and ending up having the figure that is needed for you to access the loans. And it may look good to the organization, but it will affect the organization itself, because it won't be credible, in the sense that if, let's say, the profit is not equaling to what the credit institutions are looking for, you will find that you are going to be highly leveraged, in the sense that you are going to be in debt. Excess, of course, if you be highly indebted, you find that even other opportunities will come when you actually can't do anything, because the company is heavily in debt. So what we need is that the finance manager should be able to hold a highest ethical practice, because the internal and the external stakeholders, they all base on the transparency of the accountability and transparency of the financial manager. So if that person doesn't operate ethically, we may end up misleading different stakeholders. So unethical behaviors, they often arise from the point maybe when managers decide to just prioritize their own personal goals. That's where most of the things happen, because at the end of the day, the company is not for you as a financial manager. You are only performing the duties that you are supposed to give the organization. So if you put your personal interest first, vis-a-vis the interest of the other stakeholders, then we are saying that you are promoting unethical practices. It may not be even a personal practice, but it may be you are trying to maybe to protect your company. You are trying maybe it is a goal of the company. and it's above the fundamental rights of one or more share stakeholders. You find that the company, maybe the company is in a situation of acquiring a loan, as I said. You find that the credit institution is saying maybe you should have a profit before tax or a profit after tax of maybe 2 billion. And you find that the company maybe had a profit after tax of, let's say, 1 billion. So since the company is in need of the debt, you may find that maybe of the loan, you may find that these finance managers are forced to doctor the accounts, to create or to manipulate the accounts. And they end up making the figures that are needed by the credit institution so that they can be able to be granted the loan. So it may be the finance manager is trying to put his or her personal interest first vis-a-vis the interest of other stakeholders. We say the stakeholders, it includes all the people that have any financial or any interest within the organization. It may be financial, it may be a non-financial interest within the organization, or it may be within the interest of the company as a company, as I said. So basically, that's how these unethical practices are going to be arising. And we are looking at a situation where the ethical issues these ethical issues, most of the time they emphasize on what is good as compared to what is bad. And the ethical decisions can contribute to maximizing the wealth of the business by generating maybe the goodwill. You may find that if you operate ethically, you are going to actually gain a more market share from the company because these customers are going to be trusting your products. And when these customers, they are talking good things about the company is going to end up surviving or even growing and expanding to more branches because the people, they are buying the items. They know they are of quality. They are speaking good. They can actually recommend other people to buy your goods, which will enable the company to expand in the long run. So it's always good to operate ethically because there are so many things you are not going to find the company in legal matters that maybe they have failed maybe to pay the creditors because they obtained actually more than what they had as a result of doing the creative accounting. So when you operate ethically, you find that you are going to be able to get a goodwill from the customers, and that goodwill is going to help the company to survive because more of its inventory is going to be bought by the customers since those customers are going to be trusting. And if they are trusting, or if the company is trustworthy, you may find that it will be able to get more debt from these credit institutions because they will be knowing that this organization is actually doing the right thing. Even from the tax point of view, you find that there are those companies that URA gives some certificates when they actually do what is right. They submit the taxes in time. They don't have any penalties. They don't have arrears. So they have cleared everything. So it means that company is going to be, even when they are processing its items, they don't take long like those companies that have issues. So that's how basically, that's how good it is to operate ethically. And we shall look at more of the advantages of the company operating ethically in the due course, but let's try to look at from the point of view where we are going to be looking at the unethical behaviors that the organization is going to be dealing in that are going to be affecting the different stakeholders as the company is doing its operations. So we try to look at some of the common unethical behaviors as a company that are going to be leading to such issues that we've spoke about. One, we have the money laundering. It's a more of an understanding of how some of the things are going to be affecting the organization. Because if you want to go deeper into what money laundering is, those are going to be in auditing and ethics, auditing and assurance. That's where we go deep into the different types of money laundering and what causes that. But as of the financial management, we are trying to look at just understanding what it is and how is it going to be affecting the organization if, let's say, maybe the organization is engaging in it, and how different stakeholders are going to be reacting to the actions of the company. We have the insider dealing, we have bribery, corruption, fraud, creative accounting, and all other aspects as we are going to be looking at them. So from the point of the examination, as per the examination, we see that how these ethical behaviors are going to be examined is in a sense that they bring a scenario, and from that scenario, sometimes they may include some of the unethical behaviors that have been practiced by that company that will be given the question. Then they tell you maybe to identify them and see how the organization can try to mitigate some of them. Sometimes they put those unethical practices within this case itself. Then the examiner may tell you to identify some of those unethical issues in the case, and they can tell you to find ways how you can be able to mitigate them. But what we have to follow is that to make sure that we identify these unethical issues that are linked to the case, we need to be a bit practical in a sense that, because sometimes we find the unethical issues seem to be related to maybe to, if let's say you find one or two unethical issues, but they are related to other unethical behaviors. If let's say in a question, it says maybe there is money laundering, you may find that money laundering at some point it may lead to maybe to creative accounting. But what happens in an examination is that if you are given a case and you try to go through the case and you see some of the unethical behaviors that are within there, it is advisable that we first list those that we have actually seen from the case before we actually add these other one that may be related. Because you may find that in the case they have given you maybe one, but the examiner has given that question maybe 5 marks. So you can't just put one and you assume you can be able to score all the marks. So you put one that is actually in the case, then you put these other ones, because some of these unethical behaviors, they are related, and one is leading to the other. So we are saying some unethical issues seem to be related, like maybe bribery and corruption. You find they are the same, they look similar, but you can't, if you have not found it in the case, you can't just put bribery and corruption at the same time, because maybe if it has been identified within, or you have actually found it in a case. So we need to be a bit practical in order to see the cases that have been given. We identify some of the things that are that are given in the question, but we also look at some of the things that may come out of the things that have been identified in the case, depending on the number of marks that have been allocated by the examiner. So let's try to look at some of the common unethical behaviors that you may find. One of them, we said, it's money laundering, and it's just an act of using illegal money, nothing else. It's money from unknown sources. You find that the company has obtained money, but they can't actually clarify where they got it, because if let's say the company has received some money, what we ask for is that we don't actually ask for where's how much is the amount. One of the things we look at is, where is this money coming from? And if it is coming maybe from one of our customers, we may say that, what did we deliver the customer so that we are receiving this amount? If we have not sold the customer to, and we have not done anything or interacted with the customer for any service that the company is offering, then we will be asking ourselves, why is this money being deposited on our company accounts? So that's a point. If let's say you are trying to see the money, but you can't actually clarify where the money is coming from, it may be stated in the case. It may be the company is using this and this amount, but we don't actually know where the money came from. You just say it's money laundering. It's one of the, as you are identifying the cases, the unethical behaviors. So we try to look at the illegal. We said money laundering is an act of using illegal money or money that is from unknown sources, and therefore, if it is not checked, it can cause problems to the economy. It may beat the economy, because if money is coming, it is a forged money or fake money. It is coming, but you actually don't know even where it is coming from. You don't even know who is supplying them. You find that you are going to saturate that amount in the country, and it's going to be affecting, because people will be losing. They buy items using the fake cash, and when identified, you may find that the company has made some losses. So it may be actually, even if it is just in the economy, it may be in a political issue. Politically, it will affect because if these things are coming in and you don't actually know, if maybe these are maybe political parties, but they are receiving money from unknown sources, they are funding illegal activities, which may create wars and all that will affect the company, the country at large. So we need to look at the way these financial managers are going to react on the money they have received from unknown sources. So we are saying that if we see, if say maybe the finance manager has received money on behalf of the company, they may be in terms of grants or donations, but the money you may find that we've actually received the money, but we don't even know what is that money is going to be doing. Even the purpose for the other people who send the money, they actually is not even known. You find that it's something that you can't even clarify. Even the finance manager cannot even allocate, because you don't actually know what you're receiving that money for. And it will be in the other sense that even these finance managers themselves, they may receive money on behalf of the company, but they don't declare that money to the company. They have received the money, but they have decided to eat the money because the company is not even aware of the money. Maybe they have received some donations or they have received some grants, but they are eating the money because the company is not aware of that money, because by the time they receive this money, they are the ones who are advising the company on every financial aspect, whether money is coming in, whether money is going out. They have a say on what the company is going to be receiving financially. So we need to be able to identify some of the things from the cases. I'm emphasizing the cases because most of the times the examiner is going to give you a case or a scenario. You'll be able to read through, you analyze it, and be able to identify some of the unethical behaviors that have been done. So these are some of the indicators that money laundering is existing. If, let's say, the finance manager has received the money, but that person has not declared the money to the organization. If maybe the finance manager has received the money, but they don't actually know, maybe the money is declared, but they don't even know where the money is coming from. So that's how you can be able to see. But our emphasis here is to understand is just understanding these points. Because when we go deep into these aspects, we see the different types that is going to be in auditing and assurance. It's not part of what we should be covering in financial management. So these points that we have here, the pricing, the layering, the integration, those are the things that you look at when you go to auditing and assurance. But our main focus is just to understand some of these things, because pricing refers to the act of introducing that money into the financial systems. You have brought in the money and the money is in circulation. That's what we call pricing. Then layering, it involves sending money through various financial transactions to change its form and make it difficult to follow. This is the money that is forged, to the extent that it is a bit hard for some of those people who can't identify it to know that maybe this is fake and this is good money. So those are the things, but our emphasis is just to understand and be able to identify if at all you have been given the case. If the question comes very direct, identify some of maybe list or define or give the unethical behaviors. But most of the times, the question is not all that direct. So they will give you a case, you read the case, then you start looking at those that have been identified in the case and those that are practically related to what the case is all about. So don't limit yourself on this. You look at the case. Most of the times they will not give you this direct thing. This is CPA. You don't expect those direct where you just put money laundering insider dealing and you just eat the marks like that. This is something that you are going to be testing your understanding of the concept. So that's why I'm putting more emphasis on being practical when you're looking at these unethical behaviors. So the second one, we are looking at the insider dealing. We said this insider dealing is one of the unethical issue or practice. This is more common. This is a very common practice in the commercial banks. You find that these directors, the directors of these institutions, they actually use the money for the money they have actually received from people, the people's savings, and use those people's savings to lend to themselves. They end up lending the money to themselves. And when they receive that money, they use it for their personal gains. Then they bank it at a later date. And sometimes you find that you go there to pick your money, the money is not yet, is not actually available. Or they tell you maybe you can just withdraw this. They give you certain limits on how much you can withdraw on your own money you have actually banked. So it's a challenge, and if it is there, or if it is given in the case, if you're given a case, they will be able to show you some of the indicators that maybe there is insider dealing. And we are saying some of those things, there are unethical issues which the financial managers shouldn't be involved in. Some of the examples, the very, very practical examples that you may find in the case, they may say that maybe the finance manager may use the information private to the company for their personal gain. For example, you may find that if, let's say, the company is doing the bidding, this is mainly in these government biddings. For you to win that contract, you may find that you have to be knowing one of the people. If you don't actually, you pay something for you to actually get those contracts. So what happens is that you may find that one of the people who are just on the contract committee, they try to contact you that, you know what, you bid such and such amount. They will be able to throw out these ones so that you can be able to get the contract. Because it may happen, they give you the information but that information was private to them, that it shouldn't be disclosed to anyone. Just because these finance managers have a say, or they can actually have that information and distribute it out for maybe to their relatives, friends, and all that, so that they can be able to win some of these bids. So it's a challenge that even the people who are actually not supposed to receive those bids, they end up receiving it. Especially in this employment, you find that the person who actually is not qualifying for the job, you find is the one picking the job, leaving these people who are qualified, because they may tell them that these people, they want this, and if, let's say, maybe you are negotiating for the salary, you press such and such amount. For you come, you don't even have anything, you just throw your figures, and they just look at them and say, you know what, they just throw you out. So that's a part of insider dealing, whereby you are using the information that is private, the company, for your own benefit, or for benefiting those people you actually know. That one may be one of the things that may affect, or that may look unethical in terms of the insider dealings. So when you're given a case study, make sure you look at the issues that have been identified, the points that have been raised. You'll be able to relate, you be practical, because it will be spoon feeding for the examiner to just ask to mention the unethical behaviors. It will not happen for sure. So it may happen, but it's very rare. So that's why I'm emphasizing, look at the case, identify some of them that have been stated in the case, then add those that are related, but never add something that is not even cross, and not even mentioned in the case. You add something that is maybe close to what has been said in the case. Because if you just, even if it is unethical behavior, but you just thrown it there, it's not related to what the case is all about, and you just throw it there. Sometimes it's challenging because the answer is right, but you have put it to a wrong scenario. So if the question is coming in a case or in a scenario way, make sure you give the answers relating to what has been given in the case. Maybe to give you another practical aspect of insider dealing. If let's say the institute, if maybe it's a professional body and they are sitting maybe for the exams, and you find that maybe the chief examiner gives out some information about what is going to be set in their final exam. You find that people are performing highly, but because some of them, they received the information before actually they sat for the exam. You find that people are performing highly, but because they have received the briefs, they have got some of the questions that are going to be examined in the final exam. So it's a challenge. If you find that the person is doing so, we say that person is acting unprofessional, or it's unethical behavior. The other one you may look at, maybe in terms of buying shares. You find that maybe if you know someone who is maybe in the company, is the finance manager there, you say, but how much is your shares? They tell you the price. And they may actually tell you that, you know what, for you to be able to get something, make sure you buy, because when you look at the projections of the financials, because you are the very person who is there, you know what is happening in the organization. If you start telling maybe your sisters, brothers, that you go and buy shares, you are doing unethical practice, because you actually know that maybe in 1 year's time they are going to start paying dividends. At the end of the day, even if it is not like that, you may even force them to pay dividend because you actually have your relative who actually is in need of money, because you have given the information, maybe you buy shares, we are going to pay dividends in the next year, so you'll be able to start earning money. So you find someone is doing something that is benefiting that very person, or it is benefiting the organization. So that's how it is. That's how you can maybe look at the practical aspect of the insider dealing. The other one, we may try to look at the conflict of interest. This is something that is actually happening. It is happening everywhere. One of the practical example you may try to look at, it may be in the sense maybe someone has given you a job, but instead of doing the job, you are there saying, but you guys were over-exploiting the customers. You are charging too much. Because how is it your concern? Because you are just employed to do the job, not to complain about what the company is doing. Just do the job, leave the customers to decide on themselves, than conniving with the customers to start ignoring the products, saying that the products are expensive. Because even what happens is that if someone inside the company is saying these things are not good, how do you expect the customers who are not actually part of the company to say maybe these things are of quality? So it's a conflict of interest. You find that someone is giving out the information maybe for them to benefit, because it's something that is actually affecting business, and it shouldn't be committed by these financial managers. And we are saying that the conflict of interest, this is where someone who has to make a decision in an official capacity stands to benefit personally from their decision. One of the other practical examples you may look at is maybe someone is delaying to pay suppliers. There is a way that the finance manager is delaying to pay suppliers because cash is not there. In other words, we are trying to manage cash, but cash is there, You are not saying anything. It's like you are trying to, it's an indication that you are sending to the supplier that at least you pay me something if at all you want to receive your payments in time. So when we are handling this question, let's try to be a bit practical. Practical in a sense that you can see something and you see what will happen or what can happen if at all that case happened. Someone is not paying the money is there, is not managing, is not maybe because there is a scenario whereby you are not paying because you are trying to manage cash. You are delaying the payables so that you can be able to have the working capital that you can use in the business. But you have it, you are not paying it, and you are not giving any reasonable, you are not giving any reasonable justification for what you are saying, for why you are not actually paying the money. Maybe someone is not paying dividends. The company has declared dividends, but you are not paying the dividends to the shareholders, and you are not giving any justification for why are you still holding the money that has been declared. If maybe the 20%, let's try to look at maybe the NSSF thing. The government declared maybe we'll start paying the 20%. You find that the people are just playing around. They are not paying it. They are paying it. They are not paying it, but they are not actually giving out the information as to why they are not actually doing it. So those are some of the unethical practices that you can try to look at in the examination and be able to relate to what these unethical behaviors as we have actually given them out. So it's better you be practical when you're handling these aspects. So we may try maybe to just go fraud. We look at fraud, bribery, corruption. There are so many, but we can try to because if you try to look at maybe fraud can be committed in different angles. Someone may be doing maybe creative accounting. So let's not do some of these you may find that maybe the finance manager is trying to create some of doctoring accounts, manipulating information. So those are the things that are going to be shown in the case, and we'll be able to identify them and be able to give ways on how you can mitigate them if at all the question is asking for the solutions to them. So this is a kind of a reminder that the way the exam question is going to be structured is that you are going to be given unethical practices. They are general. If at all they ask you the general thing, just identify bribery, define what it is, and that's all. But if the question comes in, it is they have given you a case, then you have to be able to see the case, identify the things that have been the unethical practices that are identified in the case, then you try to give those that are related to the case from the general unethical behaviors. Because I'm saying that as something which is a bit not enough to be able to clarify what we can look at as far as the unethical behaviors are concerned. I wanted us to go through some of the temptations, or what are some of the things you can see and say maybe this person is trying to be unethical or is trying to do something that is not right. And because we said something that is not right, but even the person who is actually doing it knows that it's not right, then we say it's unethical behavior. So let's try to add some more lights, because we said this is going to be a scenario case. If it is a scenario, you have to look at some of the things that that may actually lead, or that may try to give us lights on how on how ethically the organization is operating. One of the temptations you may be having, maybe the case is saying the finance manager is trying, or any other person in who is in a decisive position is trying to hide the truth, hiding the truthful position of the business to other stakeholders if a position does not favor him or her. You find that the person maybe, instead of telling the credit suppliers that we can't actually pay you in the time you're suggesting, they may say, since they wanted the goods, they may say, no, we will pay, when they actually know they can't actually make it. So you are hiding the information. Someone is asking, maybe you provide me with this, you say it's not there, or it's there but it will be available maybe in 2 years, because you are giving excuses instead of giving out the information that has been requested by different stakeholders. The second thing that we may look at as a temptation, that someone is actually doing something that is immoral, we may try to look at the tolerance of fraudulent activities. Someone is tolerating fraud. They say someone has committed fraud, but the person is actually not even concerned. So meaning that it's an indication that even what that person is doing is actually doing, or is entertaining that as, which is actually something that is unprofessional and unethical. Being tempted to practice misrepresentation of facts if it is favors the manager or it favors the company. Remember, we said it's either the benefit of the person themselves, or it is benefiting the company. So they may attempt to misrepresent the fact. They tell you the profit after tax is 10 billion, or the profit before tax is 10 billion, and the financial manager is saying, no, it is not 10 billion, it is 1 billion, so that they want to pay less tax. Because if you get the corporate tax, you multiply on a less figure, you end up paying less amounts. And yet, if they had multiplied from the exact figures, they would have paid, the company would have paid more taxes to the tax authorities. Failing to disclose, this is also a conflict of interest. You fail to disclose the facts. They tell you bring this, and you say, no, it's not there, it's there, it's coming, like that. So being biased by physical or by personal gifts and personal relationships, this is more common in organizations where you find that maybe the MD maybe he or she has maybe a partner in the lower positions. You find that even deciding on something that is right, you end up putting your personal feelings. So it's a kind of unethical practice that shouldn't be tolerated in the organization. Then taking advantage of insider dealing, you see that they have maybe told you that if you give me this information, I'll pay you something. You end up disclosing the information and they pay you the money that you have actually agreed, where it brings the attention that you are only standing to benefit than benefiting the other stakeholders. Then emphasizing legal other than what is moral or what is moral. Because some of the things, they are not, some of the things they are legally published, but they are not actually true. Some of them they may tell you, because some of these legal matters, they keep on changing them. If let's say maybe you look at the tax aspect, every financial year they keep on adjusting the tax. depending on the current situation. So someone may say, if let's say there is a loophole within the legal aspect, someone may end up using those loopholes to start benefiting from them. Because there are some aspects within, you can use the law to actually do fraud. If you're good at tax planning, you may try to look at, there are some aspects which you can use, maybe setting the company in tax havens. You end up paying less tax, you transfer more of the cash the other side of at the head office of the company. So there are so many things that you can use. They are not actually morally good, but they are right lawful. So you find that you are using more of law than what is actually right. Because the law says it's so, you end up doing it. So there is emphasizing individual interest, turning a blind eye, or ignoring valuable decisions. You say, oh, how will I deny this? If maybe someone who is above you says, do something for me, do me a favor, those doing favors that are actually financially affecting the organization, you may find that when you're doing such, you are operating unethically. So those are some of the things that we may look at. They may be thrown in the scenario cases, and when you look at them, be able to identify that they are unethical and they are questionable on how someone is operating. So having looked at some of them, maybe we'll try to look at the importance of operating ethically. Why should these organizations operate ethically? What do they benefit as companies? One, we are looking at, we have we may start with the last one, good corporate behavior that tend to attract the best talent to work for the organization. If let's say the organization is operating ethically, you find that every person is willing to work for that organization because the organization has a good will. Everyone is saying good things about the organization. So it keeps on attracting the top talent because everyone will be looking at working at any organization that has a good worker press. Because it's more than, if the workplace is good, the working environment, the conditions are good, it's, even if they're paying you less money, it's worth than working in an organization where you are not going, which operates unethically and things are just played on politics only, workplace politics, which is a kind of something that will affect the employee. Maybe someone may be denied even a promotion when someone is actually deserving it. So some of those are some of the things that you may, the company that is operating ethically can benefit, that you end up getting the people who are actually talented. Then the other one we may look at, operating ethically helps the firm to avoid fines and legal expenses. We've looked at this one whereby the company is operating unethically, and those people, maybe the stakeholders, they may turn around and they say, we are pressing charges against maybe certain things, that maybe if the company is doing pollution of the environment, you find that the company may actually have legal costs that are going to be leading to affecting the business, because any cost that has been introduced will reduce the gross profit, which will turn around, which will bring less profit after tax because of the expenses that have been introduced, which are actually avoidable, because the way you can avoid them is by doing what is right. So the other thing is the public trust. Public trust, that's how, because we said the company is going to be getting goodwill, then of course from that point we are sure that the survival of the company is guaranteed, in the sense that people are going to be buying your items, they are going to be referring more customers, because if you get more customers referring more customers, it means you are going to be reducing on the advertisement costs, because people, they will be the ones to market your own products when you are not actually paying them. So that's a valid point, and it comes in a sense that the organization is operating ethically. So then increase in profitability. At the end of the day, if the goods are moving well, then you end up earning a lot of money, or revenue is going to be increasing. As revenue increases, it means, remember, the costs were slower down because of the things you are producing. They only attract the customers. Customers come looking for them. You get more revenue. Even the price is going to be high, because if you have actually gained the market share, you can actually increase the price at any given time, at any given time, and you'll be able to get more profits. So maybe we can try to look at the different ways of how we can be able to mitigate some of these, or to solve some of these unethical practices. So let's try to look at, because these are the things that are going to be examined, and these are the things that we need to emphasize whenever we are looking at the unethical behaviors. And these are the things that we need to understand and be a bit practical whenever we are handling them, because we said the most important aspect is to be practical whenever you are handling it, especially when the question is giving scenario cases, or is basically first giving you stories, then they ask the question downwards. It's a kind of a challenging question, because some of these you need to be able to be practical and be able to maximize the points. Now for this solution is to mitigate the unethical issues. What I would advise is that, because what happens in the exam, the examiner always brings the question on ethics as a two in one, in a sense that the examiner gives you the scenario case. At the end of the day, he asks how you can be able to normalize or advise what management should do to be able to come out of the scenario they have given in the question. So they may say identify and give and advise ways, and give ways on how you can mitigate some of the issues. So it's more of a two-way. So the approach for that question that has been mixed up, or that has been combined as one question, you should always first give maybe you first identify the unethical issues that have been given, that have been raised in the question. Then you give maybe a paragraph and you say the above can be mitigated using the following, as opposed to first giving the case, or first identifying the issue, then you give a solution there and then. You first list, because some of these, you may find that the cases are many, the issues you have identified, they are many, but the solutions to them, they are very few. So what I would advise is you first list the cases, sorry, the unethical issues, then you give general ways of mitigating them. That's what I would consider when I'm answering that two-way question by first identifying the practical or the practice, that is the issue, the ethical practice, then you give the solutions after listing all the issues. One, we may try to look at maybe the organization. The organization may some of these organizations, they should at least design codes of conduct that emphasizes moral decision making and must be taught to all the new entrants of the organization. Because if it is a habit that maybe if you're an auditor and maybe you have been recruited as an audit assistant, maybe the first week during the induction, they should also explain to you the codes of conduct or the way how you should be doing things within the organization, or how that organization is doing or is operating or is doing its work. And that's the same way they should expect you to start operating. Then the other one is refocus the compensation plans towards meeting other stakeholders' objectives. Remember, we said these other stakeholders, they are other people other than the institution. They are the ones who have any interest. It may be financial or non-financial interest within the organization. So we need to refocus from removing only the focus, maybe to focus on making profit, but also to look at maybe the wealth maximization, or we try to look at market, or we try to look at the social responsibility. We look at the broader item than focusing on maybe getting profits alone. Then the other one, this organization, they may join and become members of the professional associations, because we have like the ICPA, that is the Institute of Certified Public Accountants of Uganda. They have their codes of conduct that even these members who are joining, all these companies who are becoming members to any professional body, you will find that you are going to be doing things in the way the professional association is guiding. You'll be guided on how to make these ethical decisions and how to be able to resolve some of the issues as a body of professions. The other one we may look at maybe is improving even the communication. That is in terms of narrowing the information gap between the finance manager and other stakeholders. There must be at least a way of how we can be able to efficiently communicate. You can be able to receive the information from this and also receive information from the other side, because it's a kind of a challenge, in the sense that if the communication is not narrowed to some extent, you find that these people cannot communicate to this, and even the other one cannot give the feedback. It's like it's a one-off communication. You find that someone is giving out the information, but you cannot receive feedback. That's not an effective communication. So basically, that's how we can go by the unethical issues, and that's basically what we can maybe discuss as far as the ethics is concerned. But maybe the last bit would be looking at some of the ethical principles that are expected from those financial managers. Remember, we are looking at ethics, but these are the general principles, what everyone should follow. especially when they are executing their duties. One, principle of confidentiality, because if the information is very confidential, it can't be released. Then if that is done, then we don't expect any insider dealing to happen to the organization, because the information is going to be strict to those people that are actually supposed to receive it. Two, we may look at the principle of integrity. We look at how the finance manager is acting. Is the finance manager being transparent? Is the finance manager trying to be true and fair to every party? If, let's say, you are resolving certain query and you are giving your advice, it shouldn't be a biased one. That maybe the person I had the interest, maybe we had personal understandings with the person actually you have grudge with, so I may end up making decisions that are favoring one of the parties. So we look at the integrity. If that is done and the thing is fair, true and fair to every party, then we don't expect that we are going to be having any insider dealing and all that, or conflict of interest. Then technical competence and due care. We expect as accountants that what we are going to be performing, we are performing all the activities as per the professional standards that are set within the profession itself. Because if you are to prepare financial statements, we know what we should follow. And every item, you may find that it has a standard. Have inventory, which we have IS2, which handles that. We have a like guideline on what we should use. Even on the methods, you may find that even those standards, they give us even all the things that we are supposed to incorporate. So if that is done, we have done it in the same way we actually learned it. So we find no room for making mistakes or doing fraud. And we may not even having those creative accounting and doctoring of the accounts. They may be nowhere to be seen. Objectivity, we shouldn't be biased. If, let's say, someone gives you a query, but the two people they are giving you their views, but you have an interest in the other one, you may end up making a decision in their favor. It's if we do them without bias, we have an independent mind, peace of mind. It's like you are independent to every party, not just being independent as a person. Let's say maybe the financial manager is independent, but even the other people or the different stakeholders, they can actually tell that this person is actually being independent. The independence is a requirement by the professional, the accountants body, and it's a requirement as when we are making some of these decisions, even in professional behavior. So those are some of the things that we need to know as far as ethics is concerned, and that marks the end of our discussion on that. And we shall pick up from there when we start our next video, which is going to be dropping soon. Remember to subscribe, share, and comment. Put also your suggestion in the comment section. You let us know what we can do. Give us your suggestion on what we have actually discussed. You see, how is it fulfilling what you actually came to learn? Is it helping you to pass the exam? Is it helping you to understand? All that you should be able to put in the comment section, because it gives us a way to go if at all we are to upload more videos, and we see what we can change and what we can add as per the consumption of the viewers. Other than that, we thank you for watching. Until we meet again, it's bye for now.